Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings to uncover the real story. Today we've got a fascinating update from Nuwellis Inc. that's all about their struggle to stay listed on a major stock exchange. It's a prime example of how a company navigates the tough rules of Wall Street, and let's just say it's been a bit of a roller coaster. Before we dive in, if you love getting clear, no-nonsense insights from these reports, make sure you're subscribed. And for those who want to connect with other investors and get more exclusive content, our Discord channel link is in the description below. So Nuwellis Inc., a company that trades on the Nasdaq, was facing a serious problem. Imagine your company's stock price dipping too low for too long and the lifeline of being traded on a big exchange is suddenly in jeopardy. Well, that's exactly what happened to Nuwellis. Back in June, they got a stark warning from Nasdaq itself. The problem was simple but critical for any publicly traded company. The bid price of their common stock had closed below $1 per share for a whole 30 consecutive trading days. Think about that, not just for a day or two, but 30 days in a row. This is a big deal because a stock trading below $1 is often seen as a penny stock, which can make investors wary and limits the company's access to capital and prestige. Now, Nasdaq has certain rules to help companies get back on track. You might think, okay, they fell below $1, they'll have a grace period to fix it. But here's where it gets complicated for Nuwellis. They weren't eligible for the usual grace periods. Why? Because in the past, they had already done a research like rules are stricter for companies that have recently done these reverse splits, sort of a you've had your chance kind of thing. So with the threat of being delisted looming, Nuwellis did what any smart company would do. They asked for a hearing. This is like going to court for your stock listing. They scheduled this hearing for August 12th. It's a chance for them to plead their case and show Nasdaq why they should be allowed to continue trading on the exchange. But then something changed. On July 22nd, just a few weeks before that crucial hearing, Nuwellis received some incredibly good news. Nasdaq's own legal team contacted them to say, guess what? You've met the requirement. The minimum bid price problem is fixed and you're back in compliance with our rules. This is a game changer. It means the stock price must have climbed back above that $1 mark and stayed there long enough to satisfy Nasdaq's criteria. Because they fixed the problem, the whole reason for the hearing disappeared. It was cancelled. Nasdaq looked at the situation and decided to let Nuwellis continue trading its common stock on the Nasdaq capital market. This is a huge relief for the company and its shareholders. It means they get to keep their spot on a major exchange, which is vital for liquidity and investor confidence. Now who's signing off on this important update? It's John L. Urbiel, President and Chief Executive Officer of Nuwellis. His signature on this report confirms the company's understanding and notification of this positive development with Nasdaq. Looking at this situation from a broader perspective, Nuwellis has successfully navigated a critical challenge. The fact that they were able to raise their stock price sufficiently to meet Nasdaq's requirements, especially after previous reverse stock splits, shows resilience. It suggests that perhaps there was positive news or improved sentiment around the company that boosted its stock. However, the underlying issue, struggling to maintain a stock price and needing to do reverse splits, often points to deeper challenges in the business, like slow growth, profitability issues, or investor concerns about the company's future prospects. The risk for Nuwellis, as highlighted here, is always about maintaining that listing. Being delisted would have made it much harder for investors to buy and sell their shares, which would likely depress the stock price even further and make it difficult to raise capital. This report is essentially stating they dodged that bullet for now. The opportunity here is that by staying on Nasdaq, they maintain a pathway to attract investors and have a liquid market for their shares. The key for Nuwellis going forward will be to demonstrate sustained business improvement that translates into a consistently healthy stock price, proving that this compliance was not just a temporary fix, but a sign of genuine turnaround. So the big takeaway is that Nuwellis got a second chance with Nasdaq by meeting the minimum bid price requirement and managed to avoid delisting, at least for now. It's a story of close calls and corporate survival in the demanding world of public markets. What do you think about Nuwellis' situation? Were you surprised they managed to fix the bid price issue so quickly? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and hit that subscribe button so you don't miss our future dives into other corporate filings. And remember to join our Discord community for more discussions and insights. Thanks for watching and we'll see you in the next video.